All right, thank you, Omobanale. Thank you very much. One, my name is Vincent, and like she said, I'm the founder. I like to say I'm the convener of this Encrisoft. We are just on a mission to ensure that every SME is able to afford cybersecurity for their business, because cybersecurity is basically is broad, right? Or that little security that you need for your business not to lose all its lifetime earnings is exactly what we want to provide. Right. So what the focus for today is basically about compliance, as mastering compliance with confidence. Now the question is, what is compliance in itself? To me, I like to see it as you just following the rule, basically. You just following the set by the governing bodies, so as they don't bring you down as a business or as an individual running your project. All right. So today we'll be looking at how to master it with confidence, where when you're talking to external auditors or when you're talking to people that are there to check what you are doing as a company, if you are meeting humanity needs as you said you would, all right, so that they don't bring your company down by just throwing in fines that they don't work for, basically. Right. So we'll be focusing on separation of concern for SMEs, and yeah, let's get into it. Let's get Okay, so why deals fall through at last minute? If you've worked at a startup before, or not just startup, maybe any company, or maybe you worked in a decision making position, there are a lot of things that can cause your deal not to work, even though everything is looking so rosy. And one of them is compliance, right? And we have 4 points here talking about what can make it fall. For example, missing documentation, compliance doubts from the business partner, no of control implementation, customer security teams flag risk, right? So one thing I see is most founders think a product demo closes a deal. It's not really that, right? But often it's the compliance checklist that kills everything at the end of the day. Okay, because for example, you are, let's say, a food vendor, you're trying to close a deal with UBA, that's United Bank of African Bank, right? And whereby you supply them. At the end of the day, after all the food is very nice and all of that. Now they ask you a question, trying to assess your risk, right? That okay, what if somebody falls ill after eating your food? Okay, now that's a question to you. But to avoid that kind of question, you probably will have already provided a particular compliance certificate that shows that you don't even need to ask all those questions. Once they see that certificate, they know that okay, this is a good business we have to deal in. So we'll look at those type of certification or standards as we go on. So that's why deal fall short last minute. So now let's look at the bottlenecks to getting. When your teams are reactive instead of being proactive, no internal ownership, over dependence on external auditors, tools are complex or too expensive. Now, in terms of your team, right? If your team is not trained, okay, definitely they probably will be reactive because they don't know what to do. They don't have the policies to follow. So they are not proactive in that sense. Right? They'll be reactive. Anything that happens to them, then they start creating rules, probably start looking for how to resolve it. Also, no internal ownership. They don't own anything. Yeah, basically, when I say own, not product or not, I'm talking about in terms of checklist, right? How should we go about a particular process? Are they the one who created it themselves? Have they been taught well to do that themselves? Because the likelihood of them following it when they create themselves is very high, right? Over dependence on external auditors. When you depend on external auditors, it's more like you are at their mercy. So whenever they come and they say like, oh, you'll be fine if you don't do this A, B, C, D, you basically just keep taking your money, right? And complex tools now, let's say AWS, or some of you are familiar with, or maybe Azure or Google Cloud. These are very major tools that people write certificates, different types of certificates to become an expert on, right? Now, when they become an expert, let's say a DevOps engineer, for example, a DevOps engineer is not a compliance officer. So probably would not even know how to ensure that whatever they are building is compliant to the product or to the country or to the territory they are building for. Right. So you need a and you need, I would say, a compliance person internally that is able to decide and say, okay, this tool you are building, even though it works, right, the data that is being transferred there should not last longer than 6 days, 7 days, 5 years. Yeah, so these are some of the bottlenecks that are there. So compliance can be last minute. It needs culture, process, and clarity before any auditor steps in. Right. So it can be last minute. It needs to be a culture. You need to train your people to live it. Now let's look at more. So it's not about money, to be honest. It's about ownership. You can't buy compliance, no, but you can build it. Real risk is equal to untrained team, undefined process. External firms can't do your homework for you. So a multi-dollar audit team means nothing if your internal logs are empty and your staff are unaware of what's expected. If you're not storing data, nobody can come and save you unless you want to orchestrate formulate something, and you will be caught, and that will even mean more fines. So now that we've looked at the the fact that it's not about money, right? It's ownership. Now let's look at some of the real examples that have happened in the past where companies lost money. And when I'm talking about money, I'm talking about $1 million, $2 million, talking about as much as $40 million and even more, right? Now, Block, I'm sure some of you are familiar with Block, Cash App, basically, Block company. They were fined $40 million by the New York Department of Social Services this April, just a few months ago. Why? Inadequate AML KYC controls, poor oversight of virtual currency compliance, as digital currency, basically, right? And this impact on them is damaged reputation, of course, investor scrutiny, basically, because your investors now they'll be like, oh my god, these people, they are not who we think they are, right? What's going on here? So these are the impact on them, and also tighter government oversight, basically bringing more rules, and this can be found on Reuters. I'll share this slide after the meeting so we can see all this news. So they had the tech, of course, Cash App. They are the users, millions of users. They are the users, millions of users. All right. But what happened at the end of the day? There was no active compliance structure, and they lost 40 million US dollars. That was crazy. And then the next company I'm going to highlight on here is Synapse. It's a banking as a service company, and they went bankrupt in last year, basically just last year. 100 million money, $100 million of users' funds was frozen. What's the cost? Mismanagement of customer money, poor documentation, and failure to maintain audit trails. Probably 1 million just went out to a customer's account. Who is the customer? We don't know. That's why you see some of the apps you use. It's like they want to take away your, they want to take away your, they want your kidney, they want your blood. They ask you to bring the color of your house, especially if it's Nigeria, because of those advanced, some of them, the advanced addressing system is not there. So actually, you send the color of your building, what's the color of your building, the picture of your building, what your street is, type it, explain, give us a landmark. You get why? Because if they don't do this, if they don't know, and there's a particular transaction that happens in their system and they're not able to trace it, the government will basically find them, right? So what happened to Synapse basically made them lose trust. They had government probes, user migration, because definitely it's insurance, right? So the users migrated to a different platform or even a new company created platform. This can be found on Bob's guide. I'll share this like I said, so you have access to these links. So no audit trails, no backup, no plan, and the result is millions locked, trust broken. So that's how crazy it is. So these people now, it's very easy to say that they didn't start from ground up. So that's why it led to this. Because if you started as an SME to keep all your documents in check, your audit rules in check, it's very easy for you to move up with it. All right. Let's look at another one. Yeah, Flutterwave. I'm sure some of you might have heard of this. They got 6.2 billion cash, that's Kenyan shilling, frozen by Kenyan High Court. What happened? Alleged money laundering and lack of operating license in Kenya. Because a particular amount of money passed through your system could not be traced. Probably if it was traced, the data does not make sense, or the data or the address does not exist. Basically. So, and then the 6.2 billion of their money was frozen. So this was cleared eventually, but not without global scrutiny and customer fear. A lot of people were scared at the moment then, and they lost a bit of reputation. They are going to come back up now, but we don't want this to always happen, right? So this was a wake-up call then for fintechs. If you're not licensed, you're not legal, no matter how big you have become. Probably the compliance officer felt like, oh, since this is Kenya, okay, and I have since this is Kenya and I have African license, so I should be able to operate everywhere. It's a lie. So this is an evidence, right? So another company, this GT Bank, some of you might be familiar with this company, and they were fined 128 million naira in 2022. Cause was because it failed to meet anti-money laundering and counter-terrorism financing requirements. And the impact was regulatory monitoring, of course, reputational risk. They are not a startup. They are not a startup. They're a big player, but yet they slip through documentation and compliance basics. Now you see all the money you're mentioning here. This is enough to make a company collapse, especially a starting business. Let's talk more about it. So Starling in the UK, this happened just a few months ago. In May, it happened in March, but in May, it was released in the news. So 29 million pounds was the fine, meaning they had to pay this money either by collateral or however, but they had to pay this money. So what happened was weak AML, anti-money laundering controls again, and error in handling COVID loan scheme that they promised them in COVID. So what happened to them was their revenue was hit, tightened future audit rules as well, which will affect other fintechs in the UK. Right? So you can't automate trust. That's something that we should know. Right? Even the most digital first banks get penalized if they cut corners. That is Starling Bank for you. And these people do as much as 300 million pounds in ARR. That's annual recurring revenue. Right? Because usually the way the fine works is, especially if it's, for example, GDPR, you're going to be fined 20% of your annual revenue or 4 million pounds. So which of them is higher? So if your annual revenue 20% is higher than the 4 million pounds, they take it. It's as simple as that. And that's how crazy it is. Now let me give you this example. You see, most of us here, if you drive, the ticket of 70 pounds or 100 pounds or maybe 100,000 naira that the Nigerian police gives to you is painful because it's the money they didn't work for, but just because you broke a rule, they pay that you have to pay that money. Now imagine you have to pay as much as 29 million pounds for nothing. So it's very painful. And lawyers that have gone through this will tell you how painful it is. And the last one here is Citigroup, a very big bank in the US. They fined 136 million dollars actually in 2024. What happened? Repeated failure to meet consent order deadlines from 2020 compliance audit. That's how crazy this is. So it means that they were being warned and they did not listen. Probably the CEO probably might not even be aware, but the head of compliance, and now might even be too much for the head of compliance, and the person lacked training their employees. Because if you train your employees, probably your employee will even come and give you the news and be like, "Oh, your work colleague come and give you the news. Oh, this is a new rule. Let's implement it." Because some things also slip through the compliance officer's head. Right. So the impact on Citigroup was continuous regulatory pressure and loss of credibility. This can be found on fintech features, and that's the source of this particular issue. So 4 years after the warning, they still didn't fix it, and they had to pay $160 million in fines. This will never be you or your companies. I mean, if you can pay this amount of fine, it means you're making billions, of course. So some of you might actually it, so that it means that you have a lot of money. That's what it means. But we shouldn't. All right. So top compliance certifications. Now let's talk about some of these. Some of you might be familiar with these names, but what does it really mean? When we say ISO, ISO stands for International Organization for Standardization. Even if it is ISO, is International Organization for Standardization, and it's strictly for Information Security Management System, ISMS. What's it for? Yes, information security framework. That is a set of standard that you have to follow. That when you follow, it means that if I am a company that have the certification, I can do business with you because you also have it. If I have the certification as a, let's say, as a financial fintech partner, right? I want to integrate, or I want you to integrate my API because I'm doing maybe 100 million in volumes daily. So when you connect with me, you basically would hit the chat button and start running. But at the end of the day, if you don't have the certification, I can't deal with you because it's a requirement in the certification that I have to deal with people that have it. So it means I've lost that deal, or you have lost that deal. Okay, that's how powerful it is. And there are different types, right? So the industry for this first one, that's 2,701. Some people call it 27,001. Is tech, of course, SaaS, software as a service, fintech, health tech, banking, and more. All right, this is very, very common. And we have 2,717 as well. 27017 is for cloud specific rules and standard. For example, if you are building something like AWS, Google Cloud, I mean, we have a couple of companies like that. Like, you could basically just wake up as Encrisoft tomorrow and say, we want to build something like AWS where people can actually host their servers. It means that if I do that, and I don't have the certification, I can be fined. It means I'm not following the standard. I'm just basically vibing with the company. That's what it means. So with this certification, you're good to go. That's the second one. They also have 9,001. This for quality management system to ensure product and service is exactly what you say it is. That's what it means. So if you are providing financial service, for example, Kuda Bank, and then you're saying that, oh, when people deposit, they can withdraw their money, they can buy airtime, they can do this, they can do that. This particular certification would ensure whatever you are saying is what it is. That's the integrity. So how do they ensure that? They have created some sort of standards that ensures that your quality is top notch. So when you pass it and you have the certification, it's a thumbs up because, for example, a company like Google can partner with you with ease. Why? Because they are standardized, they have the certification and you also have it. So it's easy to deal. But if you don't have it, you lose that deal. Sorry. So manufacturing companies, supply chain companies, SaaS and health tech can actually use that as well. And there's also 31,000. That is the ISO 31,000 for enterprise-wide risk management strategy, all industries. So if you are in a kind of industry where you are basically you have a very broad, let's say you have branches all over the world. Okay, it's a particular standard you must follow so that you are certified in that and you can deal with that businesses. And a couple of them here. I'm going to share this slide, so that we can have a deeper understanding of what it's for in the industries. But I'll take two more and then we'll move on. Actually, three. So the SOC 2 here is operational security, confidentiality, and data privacy for SaaS, fintech, cloud, B2B APIs, as APIs platforms. It maintains operational security and, most importantly, confidentiality. Because right now, I can't go to your bank and say, oh, I know who's on the call. I know Victor or I know Sly. So I want their data because I know that I'm going to give you money. Just give me their data, or just let me know how much they have in their account. Yeah, that they shouldn't be able to do that, right? Because they have this particular certification. But if they don't have it, they can actually do it because they don't know, right? That is why this certification is very important. And this PCI-DSS as well. That's Payment Card Industry Data Security Standard. If you are dealing with card service, accepting payment in cards, you need this certification. Very important. So e-commerce, retail, fintech, point of sale apps, they need that certification. And lastly, I'll pick on the BCBS 239. The reason I'm picking on this is because it's very rare and it's for only what central banks. So if you want to open a central bank, maybe you have a country. Was recently I realized that there's a country called St. Vincent. I was like, oh wow, okay, it means I can actually own a country. If I own a country, and I say I want to be central bank in that country, I need the certification. That's Basel Committee of Banking Supervision. It's for risk, data aggregation, and accuracy for banking operations for commercial and central banks. Right now, that's really very big. I'm sure it will take like 6 months, 1 year, or even 2 years to be able to get that certification. All right, we're done talking about all of those standards. Now, how do you build or outsource it or have a lean compliance team? The compliance lead is not a legal department. They are different. I mean, if you have the money, you can have a lawyer, but then your lawyer probably might not know something that has to do with maybe ISO 27001, right? So that I'm sure if there are any lawyers here, there are different branches of that as well, right? So compliance lead should have knowledge of all these standards connected to the product you are building and what you're doing. And then assign internal accountability. When I have this person in this position, let's say a product designer, you definitely have a project management board, like maybe Pivotal Tracker, Linear, or ClickUp, or Monday.com, the very popular YouTube ad, right? Where everything should be written there. Who approved this design? Who created this? Who wrote this acceptance criteria? All of that should be there. It will help you know who does what and when they do it. All right, for accountability, because when the auditors come in, that's what they will ask. Also, use tools like, yes, Alert. So Alerta is a tool that was built by Encrisoft, and you can use to manage awareness to know what happens whenever it does. Right. Also, you can outsource documentation plus audit, not strategy. You don't outsource your strategy. How you do it, no. But then documentation and audit, yes, you can be outsourced because there are companies out there that actually provide this service. So you don't need a 10-man team. All you need is 2 to 3 people doing the right things consistently. All right. So why auditors can't save you? No matter how good your audit team is, the people that come to check if you are doing the right thing. If you don't have a policy, they're not giving you certification. Forget it. If you don't have policy, because that's the first thing. So if let's say you're supposed to sign a deal tomorrow, you're supposed to sign a deal tomorrow, and then they ask you, do you have ISO 20701? Or you say, oh, you don't have it, but you can get it. They say, oh, you're going back. Then you're not going to meet your audit team. You don't have policies. You don't have your service. You're not using 2FA. Your information security system is not top standard. That process can take up to 6 months or even 1 year to complete if your company is broad, depending on the size of the company. It means that the you want to close tomorrow is gone. As simple as that. And it could be worth 1 million, it could be worth $2 million. Right. So no access logs, no assurance, of course, no staff training equals no real compliance. So outsource documentation again, plus audit is not strategy. So lack of preparation leads to collapse. Yeah, I have seen this often in Nigeria, Ghana, UK, and even US, and just like I showed us recently. All right. So in terms of awareness, how does Alerta come in? So Alerta keeps the team informed. If you're on Slack, Discord, Teams, you can basically get triggers. So custom triggers can come to you, unauthorized access, about unauthorized access, field audits, and you have no code monitoring. You don't necessarily need to be behind the code or be on the dashboard, right? And it's affordable for SMEs, so it's free forever. If you are sending 1,000 alerts every month, you continue to use it. That's how amazing it is. But then if you want more, let's say you do 1 million, because I'll show you the stats. Okay, we have companies that do millions of alerts, so you can pay between $50 to $100 or even more, depending on the needs every month, right? So think of Alerta as your eye and ears for compliance without overwhelming your devs or your ops team. All right, so those of you that are programmers here, you understand this. But then if you're not a programmer, I will basically explain this to you. So the first one you're seeing here has to do with sending the message. So you specify the channel you want to send a message to and the message you want to send. It could be about money in the reserve that you have as a fintech company going below a particular amount. As soon as it drops, Aleta informs everybody in that channel. So you don't need to go to the dashboard. You don't need to miss the email. You might miss it because the custom email might not be Gmail. You get, and then that particular message can have a response to it after maybe the account has been topped up. So that what happens, you are aware, right? And then when the compliance person comes and be like, how do you manage this? Like, oh, we use this tool, and this is how it informs us. Perfect. They'll sign your deal for you and give you a certificate. So you just plug it into your app once, choose the channel, you control the logic, whatever you want to see, and that's it. So let's see, probably show you how it works real life right now. But before that, this is the traction. But before the traction, let me actually show you how it works. So right now I'm going to go to Slack. Please Slack, some of you, those of you that know Slack. All right, and this is a channel called Letter Update. This channel could be called product managers or tasks. Could be called anything you want to do. Right now, let's go to the code. So your programmer will definitely do this, right? So if you don't understand anything, don't worry. So let's send a message. Here, of course, in this channel, what message do we want to send? Let's say if we want to send a message like 1 million has been let's say transferred. Okay, and we want to be able to reply to this in future. So yep, we'll say true. And then when we send that, we say send successfully. Now everybody in that channel should receive this message. Send twice. Now you realize this. We have this message being sent to this channel. So everybody in this channel now knows that, oh, this has actually happened. Now let's get back to now let's say we want to now reply to this message in future, maybe to say this is acknowledged, or this is really a real transaction, or it's not fraudulent. You can just come back and say, you know what, let's reply to this. Let's reply to this message. So let's say this is a valid transfer. All right, let's. Okay, now this, it says this is a valid transfer, right? So let's go and check the channel. Now you realize that there's a reply. There's a reply to this message saying this is a valid transfer. So what happens is, if there are 200 people in this channel, about let's say they are the management team or they are the whatever team, they are there, then they'll be able to see this message. So they know that, okay, actually something is happening. You get, oh, they know that if this is actually fraudulent, they'll raise an alarm. Not that after 1 week, when they are doing audits, or after like 3 days, like, oh, this account is not accounting. What's going on here? Then they will now start investigation after 2 months. Like, oh, somebody transferred $1 million. How? When? What happened? All of those things within like 1 second, or 2 seconds, when it happened, a letter can inform everybody. They'll be able to resolve the issue immediately and catch the person just like that. Right. So that's basically how that works. So let's get back. If you have questions, of course, we'll definitely answer all these questions as we go. So, like I said, so we have currently Aleta has done 50 million in terms of alerts that have been processed across companies, 4 companies more. Well, these are the pilot companies, and one client has saved over 100K in USD catching the fraud event. And of course, we are actively partnering with health techs, fintechs, health tech to be able to deliver results or to doctors or whatever information they want to deliver to themselves. And we're not guessing. We have seen what happens when you catch a breach at 2 minutes versus 2 days or day 2, right? So it's It's basically that proactive and effective when you catch things immediately. So basically, that's it. Thank you very much, everybody. I'll share this slide so you can watch the demo, you can start using our letter, you can share it. And most importantly, please join our community.